Testing. Can you hear me now? Hi, Cody. Hi, Krishna. Hi, D. This is Steve with Above the Green Line. Okay, can you guys see this chart here? Hi Frenzy, hi Pat. This is Steve with Above the Green Line. Okay, hi Jeff. On this chart here is S&P 500, and it just made a high here back in December. Some people think it had a double top. Well, it actually did have a double top, so many have called that the market's peaked. But normally it's going to go back up one more time. If I put the S&P on a weekly chart, you can see it just made a high and then it's dumped. So it's also very sold, and fear is extremely high. So normally we'll have a bounce, and then we'll see what happens. If it doesn't make a high next time, it really is in market really is in trouble. Any questions today? Frenzy asked about gold. Here's a go. Here's the gold fund IAU. Just made a high. It's pulling back. So we're waiting for it to go into the green zone. And this would be the middle of an M if it's going to peak out here. It is extremely overbought right now. But George still has it because it hasn't double topped. So once this gold fund corrects, it would normally go back up to the, drawing a couple of squares here, go back up and try the high again. Cody asked about what we do in a bear market. In a bear market, we would switch over to SH fund, which is an inverse S&P fund, for instance. But SH is not in a stage 2 bull market, it's in a base. And to get into a stage 2, you need to be making 52-week highs. Now I'm drawing the base for the stage 1 base, so you can see. Cody, can you see the base there on? Cody, can you see the base here on stage 1 of the inverse fund? And then if I go to show you the whole long 15-year bear market of SH inverse, you can see it's not in a bull market yet. Eventually it will, and that'll be a good place to make money. The old high was around $800, and it's what? To even be considered for a bull market, the 50-day must cross the 50-day must cross the green line. 50-day on this chart is the pink line, has to cross green. You can see that hadn't happened yet. Plus, it's not even it's getting. It's getting close to a breakout. 52-week high here would be above 50.48. So um, it's getting up there. Normally it'd go up to resistance and fail. It's very overbought, especially on a 60-minute chart. There is a delay on this, so it takes a while. We also know that SH will meet again. We know that SH will meet again with the banana line down here around 45, so not a good time to be buying this fund right now. Now the small caps are weaker, so the small cap fund inverse, the small cap inverse, small this the small cap inverse fund, it's stronger and closer to a breakout, but it's still got to get above. You can see the base on it, and so Cody, we've got a so Cody, this is small cap fund inverse fund is it's going sideways, and sideways means indecision. So Pat asked about why breakout. Cody, we already own the RWM fund in the swing trade, and it had a nice move this week. But Cody, yeah, we own this fund, the RWM inverse small cap. But you can see based on the yellow line that it's getting stretched out. So you normally wouldn't buy it here. The real answer to your question is the market has been going up forever. Our RWM does meet the green line rules. It's above 90 relative strength, above the green line, and the only problem with it, so RWM could be the home run, this inverse fund, the next few years. Also, short term, but this all has to do with your time frame. Here's the 60-minute RWM fund, and it's way above the bananas. It's probably possibly having a double top here, and if it double tops, it's going to go down to the banana line or pull back down. It gapped up. This one's gapped up 2 times. Cody, on each time frame, there's a banana line, and stocks aren't going to leave the banana line for very long. This one's gotten too far ahead because of fear, and if it double tops here, George the monkey's going to sell it or short it and ride it back down because it's overbought. Um, and the same thing. We we would we would normally use the pink line here on 60 minute as a sell signal, and you can see it's pink line's not really doing much anymore. It's getting tired. It's probably about to roll over, unless there's some more tariff news on Monday. But it's getting late in the game on this trade, and the fund our swing trade already hit the target. So so people ask about the S&P. It's very oversold, and it's going to go back to the banana line. But George is trained to wait for a double bottom or W pattern, and clearly the S&P is just dumped. It'll have a rally here. So if the S&P rallies next week, that will be the middle of the W, and it's got so much downward momentum that it'll normally go right back down again. So don't get all excited yet. Here's I'm drawing a potential W pattern that we could have. This tariff news is probably not going to last forever. If it does, the economy's in trouble. But we'll wait and see. The fear levels are so high, it's probably reaching a crescendo or climax. Pat, can you see the W here on the S&P if it were to double bottom? So now what you want to be doing is owning stocks that have come down that are still above the green line, and that's not a lot, but there's actually quite a few. We've been getting killed in this HIMS stock. It's come right down to the green line, and it's in the green zone on a weekly, so it should go back up at least to the 50-day, which is at pink here. And that's a normal. If you look at the chart, HIMS stays constantly meets with a 50-day. Right now it's below it because of fear. Cody says, do we have a strategy for re-entering swing trades during fear flushes? I guess you mean, do we don't buy more? And yeah, you could buy more of these positions. Sometimes we do. Um, Ideally, you want to buy the very strongest ones. So the ones that are below the 50-day are not the top ones to buy. They tend to go up slower. But anything above the green line should bounce good. Here's an example of the human emotions on the HEMS chart. You can see it was 70 bucks, and the banana line was like 30. Now the stock's at 25, banana line's at 34, so it's about 25% oversold on fear. Frenzy asks about the fear index. Let's check it. The, the fear index measures put to call ratio. When everybody's buying puts, they're scared. It's a good time to buy. I bet none of y'all can even remember why the VIX went up so much last year. But you can see the VIX was higher last year than it is now. So, um, anybody know why it went up last year so much? I don't remember either. But the reason I ask is because this tariff thing will be gone before you know it, and then everybody will be wondering what happened. Cody says it was a carry trade with Japan. To me, that was just an excuse to tank the market, but whatever. Um, let's look at. You can see here that the VIX always returns the banana line. On a 60-minute chart, you can say it's way above the banana line and a potential double top forming right here. But it's also above the pink line, so we'll see if pink can push it higher or not. If not, next week, if it fails on the pink line, this sell-off should be over. VIX doesn't stay up here very long. So everybody's sitting around wondering what to do. It's real obvious what to do. The VIX will meet the yellow line, the banana line. Stocks will rally, but just it's hard to make yourself believe that VIX will return to the banana line, and it will. The hard part is waiting for an M an M pattern here, and this one could be very close. Y'all are talking about stop losses. Um, when you get a fear flush like this, if you use stop losses, you'll just get stopped out of everything. And you take a company like Hood, um, they paid 68 for it. Now it's on the banana line at 33. So people are getting stopped out. This is just, this one's just come down to where you want to buy it. Um, and if you mechanically use stops, which is actually a good deal, but every once in a while you have these ridiculous flushes that just where everybody freaks. And when the VIX gets high like this, and you're selling stuff, you're just gonna be kicking yourself because it's the magician making up bad stories to scare people out. Pat asked about Microsoft. Microsoft not only dropped a bit, it's in what I would call a bear market, shorter term, because it not only um, broke the green line here, pink has crossed the green, it just made a new low. And this is where people are going to get in trouble. They think Microsoft is wholesome. It's wholesome, but it's overpriced. It's not. Microsoft has been going. Microsoft broke out in 2013 at about $40 and went to almost 500. That's the parabolic curve. That's as good as it gets. Everybody's in it. This one's done. It it is getting oversold. It'll probably bounce maybe near the green line, but this one's off the list. So Pat, what you want to do on Microsoft, if you still have it, is it will normally have the shorts will cover. It'll run up to the green to the banana line, and the media magician will tell you everything's fixed and hop back in. The shorts will come right back in at the banana line and short it because this thing could go down a lot more. This one's just beginning. But George the Monkey, he just buys value. And this one, if you want to buy it, it's not our style because it doesn't have any momentum. You would wait for an M pattern or W pattern, um, and you buy it because it's going to meet with the banana line up here. Maybe maybe it goes back to 400 or so. The shorts aren't going to. Pat, what we would normally do on something like this, if you're buried in it, is maybe buy some more when it does a W pattern. And what you do is buy twice as much, and then when it comes up here to the banana line, you sell all your positions. So if you buy double down here and it comes back to 400, you should be able to get out everything. And but first thing they do, Pat, if you can see the pink line, it's going to run up here maybe next couple of weeks and then come right back down again to do your M. So don't ever fight that shorter term average coming down. But if it does a W, and you can watch it on a 60-minute, and this goes to Jeff has a question about what time frame do you use for M's and W's. Jeff, here's Microsoft on a 60-minute chart. It's going to meet with that yellow line, but first you need a W. So pick a time frame, wait for an M or W, and then the target's always the banana line. If you do it on a daily chart, you have the same situation, it just takes longer. You also have more opportunity because the does that make sense, Jeff? You can even do it on a 10-minute, 5-minute chart, for instance. I'm going to pull up a 5-minute uh, Microsoft chart, and it could be doing a W, possible W here, and then go up to 368 or so, 367. Pat, Cody, you were talking about a bear market. If we go into a bear market, then we'll just keep buying this RWM fund and on every swing trade. And because the high on this one was 360, and so 3 years from now it could be $100 or so. Actually, if you go to the the monthly banana line on RWM is 70. Well, it's not that high anymore. It's about $74. So something's going to cause this to meet with the uh, banana line, probably have a recession. So we're not buying it yet because it's in an indecision. But if it does, we'll buy it, and this could be the home run the next year. Cody, a stage one base is you have the same amount of buyers and sellers. It's sort of dead money. Some people trade inside the base, but we'd rather wait for a breakout. Breakout, you have more buyers and sellers, so they go up. This one has losers up here at, constantly for the last couple of years. So why be in a stock that has people underwater that want out? You want to be in ones that have broken it. Here's this Tuya we bought recently, and it was a $28 stock. Went down to nothing, broke out at $3, 312, and quickly shot up about, it's about a 50% move. Um, it did fall below the base, but it's still above the green line. There's not a lot that are, but this Cody asked where you put your buy stop, and your buy stop should be above resistance. Here, a couple of years ago, it kept failing 312, and you can see when it finally broke 312, the volume was massive because that's a people that know what they're doing. They're piling in because the what's happening is the fundamentals of the company are improving. They're not going broke. The breakout is a decision made. They're not going broke. The $26 guys that bought it are freaked out. They've sold it for $2, and smart money's waiting for a decision. And now it's being made because this thing could go back to $10, $15. It probably will. That's how you make a lot of money. We're in it now and we're underwater, but Oh, Cody, you don't buy in stage one because you can't really put a stop, or you can, but the stop would be on the low of the stock. But when they're moving around that much, like a stock's moving from $1 to $3, those are ridiculous percentage moves. And if you did buy, well, what we do is we only buy on a breakout. Yeah, see, Cody, the you don't want to waste your money banging around here in the base. That's Warren Buffett might have time for that, but we don't. We want a breakout where everybody agrees. Buffett would just buy it down here at $2 and check back in 5 years. But we don't use that style. We buy on a breakout where you have more buyers and sellers. It's all about probability and timing. And this one, hopefully, is it had a nice impulse wave from like $1.50 to 4 cents. That's like a triple. That's a would be normally like a wave one. Now it's correcting that slower volume, so hopefully it's going to correct and then start up again. Um, First, it's got to get through the gold. The gold miners have been strong, but you can see they got overbought based on the banana line, and gold really hadn't done that great. Or gold miners mining stocks, gold's blown out, but these look like they might be ready to buy next week. The gold miners, that's a big bar. This chart's kind of hard to see, but gold was in a parabolic curve and peaked in 2011 at about $1,700. And then it had its typical 50-60% bear market, like a lot of stocks are doing now. Now it's gone. Now it's back up here going parabolic. Any more questions? You can see gold here is way above the uh, banana line because of it's a fair trade here. So it's probably well into wave three, and then it'll have a correction down here where number four is, if you can see that. Let's go to the banana hunt charts here real quick. And we can talk about what we call the wide spreads. That's when you have, let's find the S&P here, or let's take the biotechs, Lab D and Lab U. These are it, you can see that Lab D is way above the banana line and Lab U is way below. Both of those are going to meet with the banana line. And that creates opportunity. But most people are going to sit around and worry about it instead of taking action. These do need M and W patterns. These both tried M and W patterns last week, but they failed. If an M and W pattern fails, you have to exit and wait for the next one. You can see that Lab U tried a W, it rolled over. If it falls below the pink line, just get out. Here's one, Palantir, coming up. Palantir is way below the bananas. Palantir is way below the banana lines. Palantir D, which is the inverse, is way above. These both need to break the pink lines. So there's opportunity. Palantir is probably going to go up to maybe banana line on Palantir is over $90. So there's $10 to be made there, something like that. 10%. The next one is the Dow, the two Dow funds, SDOW and UDOW. These are you can see how stretched out SDOW is above the banana line and how far UDOW is below it. But first we need that W pattern on UDOW. So George the monkey, he has no problem looking for M's and W's. You can see the SPY is ridiculously below the banana line, but no W pattern, and SH is way above. George looks at that as tremendous banana hunts coming up. Cody, we never swing trade the 3x leverage funds because they decay too much in value. Sometimes we'll do the 2x double funds for swing trades, but they tend to not have as much volume. Here's the QQQ's NASDAQ. T, TQQQ is way below bananas. SQQQ. So you come here from Mars and you think these humans, they don't get it. It's going to the banana line. What are these guys freaking out about? You just wait for a W pattern and buy it. It's that simple. Here's the semiconductors. They've really gotten killed. Um, and they're weak now too. The AI fad is ending. Um, People always argue, oh, it's never going back to the banana line. And just to show you, 6 months ago, they were panic buying semiconductors. And now the semiconductor fund is already below the weekly banana line. That's how much they've come down. Let's see how much that is. This semiconductor fund is already down 40%. And Cody here, you can see the stage one base on the semiconductor fund broke out in 2013. So it broke out at like $30 and goes to 260. That's historic. It never happens. It did. Everybody got in. Now you got big problems because so So, Cody, what you want to do is find stuff coming out of a stage one base, not buying stuff 15 years later like most people are. The sectors that are coming out of bases or the inverse funds have tremendous upside, but they're not in a bull market, so we're not buying them yet. Because like this SOXX, it could bounce here off the banana line and go back. Here's another one. This UNG natural gas fund. Natural gas is cheap. Um, 3 4 years ago, it went up to 130 and now it's $20. So this is how you make a lot of money. You wait for things to come out of stage one base. We know where the target is. Target's um, what, $45. That's the banana line is the reversion to the mean. And when this UNG when this UNG fund was 140, the banana line was 60, and then it went way below bananas. It's the same game. This is where the magician comes in and makes the herd look at the wrong places. They tell them to buy UNG at 140, and then they tell them to sell it at $10. Next one coming up is a wheat ETF. Wheat is out of favor for some reason, but 2022 it was the darling. $12. Now it's $5. Banana line's at almost 7, but this one's not in a bull market yet. I'll let the chart catch up. There's about a 15-second delay on these. And George would be looking for a W pattern down here because if it goes to 650 or so, that's a 40-50% gain there. Um, okay, Cody says wheat's no good. Then why'd they pay $12 for it? They panicked. This was during the Ukraine war, but so Cody, are you saying wheat won't return to the banana line? Just showing you a few examples here. Um, Next one coming up is Pfizer. It was the darling during the COVID, went parabolic at like $62. Now it's in a stage 4 bear. The blue line's coming up. Just made a low. Cody asked about orange juice. I can't get futures on here. There is a agriculture fund, and it's fairly strong, chugging along, but doesn't have enough momentum to be bought or the volume. No, that's a future symbol, Cody. Some of these, like Costco, still have some of these, like Costco, have a nice looking pattern. They definitely are parabolic, but if you look at the relative strength, it's declining because smart money's distributing or selling. So you're getting basically the same amount of buyers and sellers. This is called so we can't buy Costco anymore because the relative strengths drop, and it's dropping because smart money that accumulated it down here at 150 bucks are selling it for $1,000. That's how the game's played. Banana line is long term is 300 and something. So this one's not going to end well, most likely. 46 bucks. Actually, y'all need to understand parabolic curve. Parabolic curve is a climax where everybody gets in. The momentum sucks people in. Everything's perfect with the company. And once they climax, then the party's over. That happened to the ARK Fund 2021. Straight up, everybody got in. Some sectors that are getting trashed, chemical stocks like ALB and Archer Daniel, they're already discounting the recession coming. So when we go into recession, these will probably start turning up. You can see it's already dropped from like 325 down to $58. So this one's probably getting close to up. I have a friend that works with Emerson Electric, and he doesn't want to sell it because it's been doing well. But I just show him you can see it's curving up, and it just dropped about 35% in that's 2 months. So, but they get so extended that smart money gets out. Buying what here's a AMD. A lot of people still follow it. It breaks the rules. We can't buy it. Everybody had it at 220. Now it's below the banana line. This one, talk about a base. It was down here. It broke out at like 40 bucks and went to unbelievable. Now it's almost to the monthly banana line is lower. I think we actually, I think we swing traded um, in 2023 over here when it was in the parabolic curve. And people don't get out. You can see it falls through the 200-day, and they still don't get out. Now it's okay. Any more questions here? Any stocks you want to look at? The ones like IBM's a dog, but it's at least holding up. The ones that are still above the 200-day or the green line should do fine on this next bounce. Yeah, that's actually a pretty good, pretty steep chart. Cody asked about converting swings into long term. Yeah, what you could. Cody, let's say the market does roll over and start down. So you could take RWM, and as long as it stays above the green line, you could use that as your stop, and then check back in 2 years. It could go back to, it's kind of hard to see, but long term. Um, Curtis asked about MSTR. It's holding up great, right above the banging off the green line there. This one just made a high. This is a correction. Let me let it catch up here. MSTR just made a high on a huge impulse wave from like 100 to 550. The move from, yeah, the 100 to 550 is impulse. This is a correcting wave, usually gives up about half, comes down the green line, and it should try the high again. Ones like this that are holding up well should take off soon once this fear flush is over. These are the kind you want to have or be looking for to buy. This is called 2 steps up and 1 step back. It's correcting a lower volume. It's kind of like a hot air balloon that gets too high up. You let off the fuel, let it fade back down, and then you goose it again once you come back to the water. Water would be your long-term average. Goose it with fuel so you don't get wet. Same thing with the Bitcoin funds. This is most likely, this will be the second correction. These white parallel lines are correcting waves. The problem with Bitcoin is Bitcoin broke out, this fund broke out at 21 and it went to almost 90. So expecting much more than that's not very realistic. Anybody else have any questions? The NASDAQ 100. The problem selling right now is we know that the NASDAQ 100 here is going to meet again with the banana line. So selling it way below is, well, that's just fear. So here's 5 years of the QQQ, and in 5 years, it's always return to the banana line at least once or twice a year. So George can't understand why humans are selling now, but George isn't buying it because we need a double bottom on the QQQ. And then if we go to 60-minute chart, so maybe next week the QQQ here will pop through the pink line. That's the 10-hour average, and get above it. Then we should have a pretty decent rally, but it would only be the middle of the W. Then it'd come right back down again normally. The target is the banana line always, but George the monkey's trained to buy it, not the first time down. He buys on a double bottom. A double bottom is a test of if there's any sellers left. Smart money doesn't buy on the first bottom, catching a falling knife. The people that buy here are short sellers taking a nice profit, and then pajama boys that don't that bottom fish, they don't have much money, so the bounce isn't very far. So let's say it comes up to 440 and back down again. Then if there's no sellers left, it'll double bottom, and George will buy, and then it should go on up here and eventually meet with the banana line here. Curtis asks about stage one bases. There's not a whole lot of bases. Most investments are in sync with the S&P, which is in a parabolic curve. So it's hard to find stuff that's not participating. S&P should have been bought in 2013. Now everybody's in it. So smart money's going to go somewhere else, and I don't know where that's going to be, but we'll find it. Right now, it's RWM inverse is strong, and it could go up tenfold from here if things got bad. We can't control what's going to happen. We do know that stocks um, over the last 15 years, because of Fed printing and borrowing, that stocks are curving up. They're way above the banana line, which is the mean value, and they will return to that eventually. So, good question, Curtis, is where is the money going to go? I don't know, but it's going to go somewhere, and there will be bull markets that do very fine. In 2008, when the market dropped, we were in SH Inverse Fund, and we were in GDX Gold Mining, and we were in the Russian Fund, which was pretty much a metals fund too. All three of those did great in 2008. Um, but then this, let's see, I'll show you SH. Can't really see it because ETFs were pretty new back there, but SH went from 300 to say 750. So that's a decent trade in a year and a half. It'll come up here in a second. So Curtis, what we do is, like on this SH fund, the banana line, the reversion of the mean value is $192, and the stock's trading at 49. So something will probably happen. This one will meet with the banana line. So this one could triple, and everybody will be shocked. But we're not buying it yet because it's too early. But if it does, this is where you can make a triple next 2 or 3 years. Cody asks what will make the retirees pull out of their money. There will be some kind of fear cycle to cause people to sell. We have tremendous debt, whatever the reason. That's just how the game is played. What we know from history, if you have a parabolic curve, it always ends the same, whether it's gold or tulips or Bitcoin or marijuana funds, they all have the same pattern. So you can fight it, most people will, and they'll lose half their money, but that's how it works. For instance, like the S&P, I'm saying it's going to go to the banana line here at 3,000, and you'll say, oh, no way. I can show you chemical companies like Archer Daniel. Well, it's not quite there yet, but it's getting there. I thought this one, let's see. Yeah, this ALB, we actually owned it in the stage 2 bull. I'll let the chart catch up here. ALB had a parabolic curve, and 2020 went from 50 to 350 or 330. Doesn't get any better than that, and now it's $58 again. So it's, you know, it's going to the banana line at 330, and people say, no way. Now it's below the banana line. So, Cody, you're asking a logical question. Why? As a technician, you don't care. It just happens. Reversion to the mean, or I guess the reason why is because the magician's going to scare people so bad that they're going to freak out and sell their stocks at the bottom. Just like the guys that bought ALB here, they're selling it now when they should have sold it $300 ago. But they're selling now. This one's closer to a bull market. Hey, Bob, what do you mean by Politics? Um, and Curtis says, what about the Russian fund? I didn't know there was one. We used to trade RSX. Let's see if is there a new fund? RUSL? I don't I don't get that symbol, Curtis. Is that a symbol? Anyway, that I was hoping the Russian fund could survive because it was really getting cheap, but they delisted it there. Bob, you still there? Oh, here you go. Here's how the game is played, Curtis. Solar funds were the darling in 2020. Got ridiculously solar funds. TAN as a symbol went parabolic in 2020. Went to 125. The banana line was at 20 or 30. Now it's had a long 5-year bear market. Solar funds are cheap. The um, stocks at 30, banana lines at 60. So solar stocks or this ETF fund could double based on the banana line. Nobody's in it. They all got it at the top. They're all getting flushed out now. Solar companies aren't all going to go broke. So you buy an ETF and you wait. George the monkey's waiting for a W pattern. Um, and then George will buy it, say at 28 in a few months, and then we're not going to buy anything till it breaks the blue bear market. That's stage 4 bear, and then it'll meet again with the banana line. Y'all still hear me? Bob asked about technical Trump affecting the market with the tariffs. Right, Curtis. We used to do the Russian funds. We'll have to find something. There'll be something different that takes its place. Anyway, Curtis, do you see how George the monkey couldn't buy the tan fund up here? He sold it short actually on an M pattern because it was ridiculously above bananas, and now George is fixing to buy it again, way below bananas. Pretty easy, huh? Okay, Bob. As a technician, you're asking about tariffs and stuff. Um, let's go back to the S&P. We know that S&P is going to return to the banana line. It was way above it. Banana line on the S&P, I'll let it catch up. It's at 46.74. We're 2/3 of the way there. So you could say that Trump did this or whatever. As a technician, we don't really care. It creates opportunity because uh, all we're doing is saying the target is the banana line on the George the Monkey video. S&P is way below it, so you could say Trump or whatever has created opportunity. So you can either um, be upset about it, or you could be like George. He saw an M pattern, so he sold or shorted the S&P because he knew it was above the banana line here. And I'm going to a daily chart here. But you can see on that weekly chart, it's returning to the banana line. That's a given. Um, now, yeah, if you can see the daily, S&P is way below the yellow line. It will meet again. I can show you years of it just tracks the yellow line like a magnet. So selling down here, you're going to regret it because it's going to meet again. If anything, what's going to happen if we're going into a bear market, the shorts will cover soon. We'll have a rally up underneath the banana line. The shorts will sell everything in short, and then we'll go into a bear market. That's the worst, the bearish case. But it's going to run back up to the banana line here eventually after this flush is over. And so George is waiting. He can't buy for a W. So put it on a 60-minute. We need a W here. And there isn't one. There's a lower low. But it's going to eventually do a bounce here and do a W on a 60-minute and run up. And but just Ben, have you seen Bob, have you seen the George the Monkey video on Discord? He just buys on W patterns. Coming up is the 60-minute S&P, and it's going to return to this banana line. That's up around 5,600. It's way below it now, so opportunity. But once it gets a W, the shorts will cover. It'll run up there, and then they'll short it again. So your question is, I think, Bob, is as a technician, or let's take George the Monkey. George can't read. He knows that things return to the banana lines, so he sees opportunity on. Anytime he sees a banana line and you're way below it, he sees opportunity. He loves bananas, so he's going to go up and chase it. He just needs a W pattern. He doesn't understand human emotion. He's not scared like we are. We're seeing our money disappear. We get scared instead of buying. Or really, the problem most people have is they didn't raise cash at the top, and so now they're having to watch but all that's happening is um, we've known all along that the S&P is way above the banana line. So now it's coming back down to normal value, and then it'll go back up. Eventually, it won't make a high. Curtis, yeah, the marijuana funds are cheap too. They're in a huge base, but we're buried in that one. And this is a good example of parabolic curve on the MSOS. It went up at $50. Everybody got in marijuana funds. Now they're $2, just getting trash. But here's one for you, Curtis. The banana line on MSOS is $12. So once they quit flushing these marijuana stocks, and the ETF's probably not going to go broke. So once marijuana gets back in favor, these will probably, it could be here's where you could make a lot of money. We're not buying it yet because it's not ready, but this thing could go from $2 to $11. S&P is not going to do that kind of move for most of us be dead by the time it does that again. Right, Bob. Politics is all discounted or basically the market's telling Trump that the tariff thing, they don't believe it's going to work. But just like Cody a while ago, he goes, what's going to make things do this? It's going to happen. And I actually think it's steered, but it's going to happen whether you like it or not. So you can accept it or be frustrated. Um, let's see, Curtis talks about trade mix from trading low via selling short. I don't know if you heard earlier, Curtis, but the only we use inverse funds for shorting. The only inverse fund that meets the green line rules is RWM. We bought it last week or two, and it's made a high, so we've got a gain on it. But RWM is way above the banana line, so it's probably too late to buy. And when the chart comes up, you can see the banana line is still going down. We need it to curve up. And eventually, if we're going into a bear market, then RWM would stay above the banana line for the next couple of years. If it does, then it could go up huge. I'll show you the monthly chart. If you know the 4 stages, RWM's in a stage 1 bull base indecision. We're not buying it yet because it's dead money. It breaks 27, it'll begin a stage 2 bull, and the old high was 372. If we got into a bad debt crisis, this thing could go right back to where it was last recession. So there's always going to be something moving up. The inverse funds do have bases, but there'll be other sectors that do. So you just have to wait and see, Curtis. Anyway, that's enough rattling on for today. Got time for one more question? Anybody? Short term, what you should tell yourself is we have our roadmap. The S&P is way below we use the 60-minute line as kind of a fair market value. So over the next month or so, the S&P is about 10% undervalued from fear, probably more than that, 15%. And so the next goal is get it back here. And then if it can't break it, then you might want to start selling some stocks because things, trade war wouldn't be good, but this trade war could be a phony negotiating tool also. So we'll see. Any other questions? Okay, thanks, Cody. Thanks for showing up. We'll see you next week, and good luck this week. Bye. Bob, on your alerts, real quick, the alerts are all posted on the web page. We also send out emails, but most people, if you want to make sure you get your alerts, you need to set up a Discord or Twitter X account because the alerts go there instantly. Email and text are not reliable, but you can also always check the menu on the Greenline web page. There's a section called Stock Alerts. They're always listed there if you want to catch up. Let's see if I can find it here real quick for you. Hey, Ben. Yeah, thanks, Rodney. Bob, I'll pull it up here real quick if you can hold on about 15 seconds. Thanks, Jeff. Bob, if you click on the, go to the website, click on Market Insights, then you'll see a menu with a bunch of items. Under buy and sell signals, it has trade posts, trade alerts, and day trading alerts. So all that stuff is listed there. But if you want them sent to your cell phone, you should get on Discord or X and set up mobile notifications, and then they hit instantly. Texting is not very reliable, and emails sometimes can get bogged down. But they're always here instantly also. Okay, thanks guys. We'll see you next week. Bye.